On All About Stocks this week, volatile trade on Dalal Street. We'll tell you what you should be doing with your stocks portfolio. Ambareesh Baliga tells you why he thinks you should buy Sun Pharma for the long term. And he's made a profit of 36% on his portfolio. We'll tell you how you can make similar returns. Welcome to All About Stocks. This is a show for long-term retail investors. I know it's been another fairly volatile week at the market. But on this show, we have your strategy. All you have to do is give us the next half hour. We'll tell you what you should be doing, what you should be buying, what you should be selling, and what you should be holding on to. Our email ID is at the bottom of your screen. Send in any question you have about your stocks. First, let me bring in Ajay, who will give us an update on all of the market action this week. Ajay.
Well, Faye, it was another difficult week for Indian equities, in line with how other emerging markets also fared on the negative side. This particular week, Indian markets have also lost over 1% on the benchmark indices, Sensex and the Nifty. In fact, the Nifty fell to the lowest level seen in 8 months. We even shut shop below the 8,000 mark, not only break below it, but shut shop on Friday below the 8,000 mark, as if we are going down, drifting lower. That's what most of the technical analysts are saying. Well, the FI community has been continuous sellers in the market this particular week as well. Though DIs have been buying, but they've not been able to take away all the sting from the FI selling, and that's why we are heading lower. Two big concerns: one, the progress of the monsoon, and second, the risk aversion which is arising in global equities because of possible US Fed rate hike, which may happen in December, and that's why a lot of profit taking is happening. The area around the Eurozone and the German bond yields also have been rising, making a lot of global investors jittery. So most of the experts in the market back home in India say that this is an ongoing correction. Perhaps in a worst case scenario, we may fall another 2-3% from current levels. We have already fallen about 12% from recent highs. So a 15% kind of a correction from recent highs is entirely conceivable. But there are 2 points which are coming up. One, of course, traders have to be extremely careful while trading because the market is in sell-off mode, so have to keep their stop losses very strict. However, it's also a very good time for long-term investors to accumulate good stocks at lower levels and with a 1 year plus kind of a time horizon, because corrections are part of any bull market. And most of the experts we've spoken to this week say that this is just a correction in an otherwise ongoing bull market. And as the visibility on earnings recovery 2 to 3 quarters far out come back and seep into the market, there would be a rebound due. But right now the market is in the throes of a very good correction.
All right, Ajay, joining us today in the studio, Ambareesh Baliga is an independent market analyst who's been holding our hand now for several years. Ambareesh, it's been nearly 6 years in our association with ET now.
Time really flies.
Time really does fly. And I mean, we've seen so much of the market in the last 6 years, ups and downs and, sideways movements also. But I want to understand from you, since, from where we started, and we started talking about this show in 2008, if I remember correctly. From where you're looking at the market right now, there's a lot of speculation about the fact that, okay, we might see another 5% cut or another 10% cut. What are the odds that we might see a much sharper cut than that?
Odds are very low because already we have seen a very decent cut. We have come down from those 9,100 levels to below 8,000. So which is again a decent, close to about a 12% sort of a cut, 10-12% cut. So I really don't expect the market to go, maybe maximum about another 5 or 6%, not really beyond that. So I really don't see the markets going below that 7,500, 600 levels, which could be the panic bottom for the markets. But then those, I think, who have missed out in the last 1 year, I think it's a great opportunity for those people to buy at lower levels, because we are still clearly in a long-term bull market. I still believe so. And this is a long-awaited correction, which we've been talking of for a while, but we never saw a correction in the last 12 months. I think this is the correction which we are waiting for, and we are witnessing it today. But then what normally happens is, whenever a correction like this happens, people get overwhelmed and think that the markets have turned around and this is a new bear market, which I don't think so.
I'll take some responsibility for this. The media tends to make a little bit of noise when the market, say, comes below 8,000, which happened this week. There was a lot of red colors on the screens that, for most of the news channels, they were talking about how it's fallen below 8,000 and all of this is so bad. As a retail investor watching at home or picking up my paper in the morning, looking at that number of sub 8,000 on the Nifty, how much should that worry me?
No, I don't think it should really worry you too much, because that's just a number. As far as I'm concerned, it's a number, but it's a good talking point. 8,000, 9,000, they're great talking points. But then looking at the environment, yes, I think the sentiment was too high. I think the expectations were too much from the government. We have not seen that delivery, but will we not see the delivery going ahead? I don't think so. I'm quite confident that we should see some amount of delivery from the government over the next few months. I think the only big question mark is monsoons, which I think again it's...
If we look at the two question marks really, there's
Right.
monsoons and there's interest rates at this point.
Interest rates I'm not really too bothered about, because even if the governor had reduced the interest rates, say by 100 basis points, people are expecting 50, even if they had reduced by 100 basis points, who is going to come and borrow at this point of time when there is not much of a visibility?
Where will the visibility come from then?
Visibility can come basically from the government spending. Government needs to start spending to kickstart the economy. And the best way to do that is to start spending on the infrastructure projects which have been stalled. I think that's the first step the government can take. And then I think if you have the power sector taking off, automatically the rest of the economy will start moving around it.
You know, we had a conversation about the power sector a year ago when
Right.
we talked about this new government
Yes.
is going to now start moving infrastructure, moving power, moving all of those sectors that need help. What would give you reason to believe that it will happen now?
No, because see, the intent is there. And I think all of us know that these things cannot be done overnight. So we have given them 12 months, possibly give them another 3 months more. And hopefully we should start seeing things moving, because clearly the intent is there.
Should I then be buying infrastructure, power, the sectors that you're talking about?
Yes.
Or should I stick with, say, banking, with IT, with pharma, with, consumer goods, the kind of sectors that have sort of seen us up to here in this bull market so far?
No, it has to be across. But then if you're talking of India growing at 9-10%, it cannot grow at 9-10% in the next 3 years unless the infrastructure sector takes off, unless the capital goods and the power space takes off. And those are the stocks which are currently available at decently deep discount. May not be the capital goods space which has done decently well, but the rest of the space is available at deep discount. And as an investor, if you want to get a return which is better than what the market could give, I think you need to be in this space.
Name a couple of stocks in the infrastructure sector that you'd find attractive right now.
Infrastructure sector, I would clearly look at something like ILFS transportation, where again the balance sheet is still decent even at this point of time. There are a couple of others where the balance sheet is slightly stretched, but I still believe that the balance sheet can be repaired. And one such stock would be GMR Infra, which again hasn't really performed too well. I mean, it's performed quite badly in the last 1.5 years. But I think at these levels, there's not much of a downside.
All right, so it's the 13th of June, 2015, and you mentioned GMR Infra and ILFS Transport on this show. We're going to hold you to that. And I'm going to keep a very close look on those two recommendations. I want to ask you about the banking sector. I mean, I don't think at any point in the last 6 years you've disagreed with the fact that there's plenty of potential in the private banking sector.
Absolutely.
If we look at stocks like, say, ICICI Bank, that's come down so drastically from the peaks we saw it hit. Is this a good time now to go out and pick up more of that banking sector?
In fact, ICICI Bank is there in my portfolio.
Yes.
And today I'm removing that stock from the portfolio.
Okay.
Basically because I think that's one of the few stocks in the private sector space where there are question marks as far as the asset quality is concerned.
Okay.
So at these levels, I don't think one should be looking at ICICI Bank in the private sector space, but there are a number of other private sector banks which I think one should look at. For example,
give me names.
HDFC Bank, IndusInd, DCB in the smaller one. You have a City Union Bank, which is a small private sector bank. So there are a couple of these which could be looked at.
I noticed you didn't mention Axis, a lot of other experts.
Axis, yes, absolutely.
Okay, Axis as well.
Yeah, absolutely.
All right. So that list is on your screen. If you have questions about anything you heard Ambareesh mention on the show, feel free to write to us. Our email ID is at the bottom of your screen. It'll be our pleasure to hear from you. I'm going to take a couple of questions that have come in for you, Ambareesh. Vidit Mathur has written in 300 shares of City Union Bank, which he bought at 58 rupees. He wants to know if he should hold on to that stock. Hold on?
Yeah, absolutely. I mean, that's the one I just spoke about. And I, again, had recommended it some time back at levels of about 98, 99. It went to 100, 405, looking at the way the markets were. I think it's corrected a bit from there. But again, this is a medium to long-term hold. And in fact, I see levels of about 140.
All right, here's another very interesting question. And there's a reason why we picked this one, because there'll be so many viewers sitting at home worrying about their holding of SBI. Arvind Kumar has written in, he has 100 shares of SBI, which he bought at 294 rupees on an average. He wants to know if you should hold on to that stock. SBI ended the week at 253. If you're talking about, the way managements run banks, if you're talking about asset quality,
right,
and we're talking about, there are a lot of worries with PSU banks in general.
Absolutely.
But SBI is the biggest,
yes,
is the biggest player in that space. We heard the finance minister come out and say, yes, I believe that banks should be recapitalized right now. We should make that cash available at some point. What does all of that mean for the SBI that I'm holding in my portfolio?
See, SBI is something similar to a central bank. So SBI, cannot afford to go down. But then, yes, if you're talking of the next 2 or 3 quarters, there is trouble for the PSU space, especially because of the NPAs. So I'll not possibly say buy fresh at this point of time, but I think you can just hold on, because finally, once the NPA issues get sorted out, which hopefully should get sorted out once the economy starts moving, and there's normally a lag of a couple of quarters. But once people start seeing that the economy is moving, you'll again have interest coming back into the PSU space, and that is the time I think SBI will outperform.
We have a question from Vikas, who's written in 200 shares of ABG Shipyard, which he bought at 248 rupees. He wants to know if you should hold on to that stock. The stock, I'm going to bring it up on your screen, ended the week at 180. Now, ABG Shipyard surged about 11% on Friday after receiving interest from Germany-based Privintrust for a 49% stake sale. Hold on to it, or do you think that use this opportunity?
Because of this news, hold on to it. Okay. Because, once their due diligence and all that is done, and once they make a final offer, possibly the price could be much higher than the current market price. And even if he wants to hold on with the new promoters, since they'll be bringing in cash, I think they'll be able to come out of the CDR much faster. So overall, it looks better than what it was looking as of yesterday.
All right. It's time also to come up with that one recommendation. Now, every week we ask our guests to pick one stock that makes sense at these values. Ambareesh has been kind enough to pick Sun Pharma for us at, on this week. It ended the week at about 813 rupees. Tell us why Sun Pharma.
In fact, again, one of the better or the best pharma stocks in that pack. If you ask me to choose 3 pharma stocks, it would be Sun Pharma, Lupin, and Dr. Reddy. But then this stock has corrected decently well in the last month and a half. And from that point of view, I feel that this could be a decent entry level as compared to Dr. Reddy or Lupin.
Welcome back. You're watching All About Stocks in ET now. Ambareesh Baliga is still with us, and we're figuring out a strategy for your long-term stocks portfolios. Now, Ambareesh designed a portfolio for us on this show on the 4th of January last year. It's currently at an overall gain of 35.66%. The Nifty over the same period is up 29%. So we're outperforming the Nifty on this portfolio. What I'll do is I'll give you a list of the stocks in this portfolio. There's NTPC, ICICI Bank, L&T, Z Entertainment, Engineers India, Pidilite, Lupin, Himmat Singh Said, Infosys. Infosys is up over 100% since we bought it. So is Bajaj Finance. That's up nearly 200%. Ipca Labs and Tata Steel. Ambareesh, like you mentioned a little earlier on the show, you are making some changes in this portfolio.
Yeah.
First of which is ICICI Bank. Tell us what you're replacing it with.
ICICI Bank I'm replacing with HDFC Bank, a much stronger, more stable in terms of performance. So that's the reason I'm converting to HDFC Bank.
I remember when you picked ICICI Bank,
yes,
you did believe that it would be a standout player among the private sector banking space, which is why you didn't pick an HDFC, because HDFC does that regular performance year on year.
Absolutely.
Why the change of heart now?
ICICI Bank performed extremely well in between. It was an outperform as compared to HDFC Bank. But then again, in the last quarter, once the results came out, we have seen that underperformance again because of that question mark on the asset quality. And I think that is going to keep troubling this bank going ahead. So, I really don't want to take a chance at this point of time. So, I would prefer to shift to a safer bet, which is HDFC Bank.
All right. You also are exiting Bajaj Finance and getting into coal India.
Bajaj Finance, yes. I won't say that I'm negative on Bajaj Finance, but I would like to utilize that cash for another stock which can possibly give me better returns in the same period of time. And that would be Coal India. Again, because there's a clear government focus now on Coal India to improve the efficiencies. And now with the e-auctions, I think the margins also should improve for the non-power coal. So I think at these levels, I would say that there's not much of a downside. We have seen extremely good support for Coal India at levels of about 360, 370. And I think it's just, I mean, could be at a point where it can just take off from here once the markets improve.
You're also adding Sun Pharma, like we talked about a little earlier on the show.
Yes, absolutely. Again, because IPCA unfortunately hasn't performed in the whole of last year. And whereas Sun Pharma has been performing extremely well over the last 2.5 years. And in the last 1.5 months, we have seen a decent correction, which is actually giving me a good re-entry point for Sun Pharma.
All right, so I'm going to give you a list of the stocks on Ambareesh's portfolio as they stand right now. If you have any questions for him about this portfolio, feel free to get in touch with us. There's NTPC, HDFC Bank, Larsen & Toubro, Z Entertainment, there's Engineers India, Pidilite, Lupin, Himmat Singh Kased, Infosys, Coal India, Sun Pharma and Tata Steel. All right, let's move on and answer a few more questions that came in. Ajita Patel has written in 100 shares of USL bought at 34.50. Should I hold on to that stock? Does it make sense to hold on anymore?
I don't think so. It's still looking quite expensive. They still have issues as far as the balance sheet is concerned. I mean, I think a decent amount has been written off in the past quarters, but I still feel that there are still more skeletons left. So
it does seem like a stock where you'll constantly be reading about it in the news for some reason.
Absolutely. So it doesn't really make sense holding on to such an expensive one.
All right. There's also a question that's coming from Ram Babu. He has 50 shares of Jain Irrigation, which he bought at 67 rupees and 45 paise. Should he hold on to that stock?
I think he should hold on. Basically, because in case, I mean, your monsoons are not up to the mark, like there would be focus on irrigation. And when you talk of irrigation, Jain Irrigation comes first.
Last question, Somendra Datta has written in, he wants to know if he should be buying HUL or ITC at the current levels for the next 5 years. It always makes me happy to hear from an investor who has a 5-year view on anything.
Right.
Interesting stocks he's picked, HUL and ITC. I want to talk about ITC first because we know that this time, after so many years, the price hike in those, all those cigarette packs have hurt sales.
Absolutely.
The sales have come down drastically. And if that's a trend for things to come, should I be betting on ITC for the next 5 years?
But I think that's already discounted to a very large extent. I mean, where has ITC performed in the last 1 year? I mean, the stock has come down from levels of 400, 410 to below 300. So that clearly discounts the negativity as far as cigarettes are concerned. The company has been preparing for this since the last 10, 12 years, already diversified into various other fields, especially FMCG. I think that investment will start paying off in the next 3 to 4 years. Already,
but in all fairness, it's still very heavily dependent on the cigarette business. That balance has not been brought in just yet.
Yeah, but then in the next 3 or 4 years, if I'm not wrong, cigarettes could actually come down to levels of about 35, 40%. So that's when you'll start seeing the sort of returns from the rest of the businesses. So I think at these levels, again, I would say that there's not much of a downside. It could take a while for it to start moving. But then since he has a 5-year view, I think these are like decent levels to get in.
So buy at this level, but don't panic 2 years down the line.
Don't panic, yeah.
When it doesn't work. What about HUL?
HUL, I think one can look at buying at these levels. The correction has been decent. But then again, I don't expect this to move at least for the next 6-7 months till really you have the consumer sentiment improving. So that will take a while, but then I think you should be buying.
If he's obviously looking here at a consumer stock.
Yes.
Is there anything you've seen in the market right now among that consumer space that you think would hold him in better stead than these two stocks, a better option perhaps?
No, I mean, see, when you're looking at a space for like longer term, it is best to buy the leaders. And these two are more or less the leaders.
All right. So it's 2 thumbs up for both of those stocks. You can go ahead and buy HUL and ITC at current levels. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Ambareesh Baliga is still with us, and we're going to try and answer as many of your questions as we can in the next few minutes before we wrap up the show. We, of course, got an entire portfolio to look at, and this is Shashant Patil's portfolio. He sent us a list of the stocks in his portfolio. He wants to know, Ambareesh, which ones of these he should be holding on to. 60 shares of Bharti Airtel, which he bought at 330. Hold on to the stock?
No, I think you should look at booking out to a certain extent, or maybe the full quantity, because if you have heard the Reliance AGM today, in fact, they'll be launching the Reliance Jio by December, and I expect disruptive pricing to happen, similar to what we saw happen in 2003. So because of which, I think the margins for most of the existing players will get squeezed. So at these levels, I think he's getting a decent return. Should be booking out.
I'm going to very quickly ask you, does this make sense then for whole good for all telecom stocks?
Yes, absolutely.
Because it'll hurt them all, right?
Absolutely.
So exit all telecom stocks.
Idea and Bharti.
Okay.
Reliance is anyway down. Reliance Communication is anyway down.
All right. 25 shares of Canara Bank, which he bought at 441 rupees. Hold on to that stock.
Canara Bank, I think he can just hold on for the time being. I think it has already corrected decently well. Although it will be under pressure for a while, but I mean, I wouldn't recommend selling off at this point of time.
Should he be accumulating Canara Bank?
He should wait for a while to accumulate, not at the current juncture.
25 shares of HDFC, which he bought at 753 rupees. Hold on to HDFC, I assume.
Always.
Right, always hold on to HDFC. He also has Sun TV, which he bought at 437 rupees. Sun TV ran into a fair amount of trouble as well this week. Hold on to that stock. Is it time to just...
No, I think one should be exiting even at a loss, because I mean, as a thumb rule, I don't think one should be investing in the group or the stocks which are at the wrong end of the political stick.
That's interesting, and we could spend another half an hour talking about that really, but we don't have that much time. Tata Motors, 30 shares bought at 282 rupees. Hold on to Tata Motors.
Tata Motors, I think one should hold on, because again, post the results, it has corrected decently well. It can still go down further by either 20-25 rupees. I think at those levels one should look at buying, but at the current juncture, it's a hold.
All right, hold on to that one as well. And remember, if you'd like us to take a look at your portfolio, all you have to do is send us an email. The email ID is at the bottom of your screen. Ajay Shetty wrote in, he has 250 shares of Adani Power, which he bought at 41 rupees. Now, that stock ended the week very close to 30. You know, I'm bringing this up because you talked about power in the beginning of the show. So hold on to a stock like Adani Power then?
Hold on to Adani at this point of time, because the downside seems very limited from here. It has balance sheet issues, but then we should remember that the group itself is decently strong. So because of which I really don't see this stock really going under. And once the power sector bounces back, which I expect to happen quite soon, this could be one of the first few ones to bounce back much faster.
All right, let's also address then Sujata's question. Sujata wrote in saying that she has 5,000 shares of GMR Infra, which she bought at 24 rupees. Should she hold on to that stock? She's lost half the value on that stock. It's going to pop up on your screen. But you said buy GMR Infra in the beginning of the show. So you recommend she holds on. Should she be adding to her portfolio?
Since she already has, I wouldn't recommend adding more at this point of time. I think she can just wait for a while. Once she starts seeing a movement, I think one should be looking at buying this closer to about 14.5, 15 once the movement starts.
Ambareesh, before you go, would you give us your disclosure about the stocks we talked about?
Yeah, disclosure are there. I mean, the stocks have, like we have discussed, you can safely assume it's there in my personal portfolio, also with my clients to whom I advise.
All right, Ambareesh, thank you so much for spending time with us this week and answering all of our questions. If you have a question for Ambareesh Baliga, write to us. Our email ID is at the bottom of your screen. You can reach me personally on Twitter as well. Thank you so much for watching.